I mean, Mark, is this a market that is really only about those mega cap names? Just look at the underperformance of the NASDAQ right now versus the Dow.
Yeah, Dom, good morning. So I think really what's going on right now is the market's struggling to find direction right now. And if you think about it, we're entering uncharted waters for a lot of investors. We've got this combination of high inflation, rising rates, hawkish Fed. That's new to a lot of people. We haven't seen a situation like that since like the 70s, right? So I think really what that's doing is it's bringing with it a changing of the guard. You have this new market leadership. You've got longer duration stocks, a lot of growthy tech stocks, which have been getting hammered. I think that's going to continue. And I think you see money continue to move into shorter duration stocks. That's stocks that are generating cash flow and earnings right now, maybe even paying dividends or engaging in share buybacks, which I know those haven't been in favor over the course of the last decade or so. But I think that's really what you're going to see happen. And that's what's happening right now.
And towards the year end, we often like to look ahead, Mark, to what are the big themes in the coming year. What do you think from an investing perspective will be the driving forces behind that early trade, say in the first couple of quarters of next year? Is it going to be the continuation of the tech trend? Is it going to be this idea that the Fed is going to take some steam out of the markets? What exactly is that kind of broad look that you're looking at for the first part of 2022?
Yeah, so I think, obviously right now and leading into 2022, the two major narratives are, number one, Omicron. And not necessarily the virus, but the policy response, right? Mask mandates, lockdowns, stuff like that. And also a very hawkish Fed. I think the Fed is actually going to end up being more hawkish than they've led us to believe. Jay Powell last week implied that inflation would be down to 2% a year from today. I have no idea how we get there unless the Fed gets even more aggressive than they're leading on. They've talked about, obviously tapering will end in, I believe, March. There's talks about maybe 3 interest rate hikes next year. I think what you actually end up potentially seeing is the Fed may begin to unwind its balance sheet and start selling off all those bonds that they've been accumulating over the course of the last several years. So, look, the stocks have to climb a wall of worry in 2022. I think they'll do it. I think stocks are higher a year from today, but there's definitely some pretty substantial headwinds right now.
What drives that, Mark? What part of the market, what stocks specifically, what sectors, what industries are in that position to really outperform in that wall of worry scenario?
All right, Dom. So look, we're shifting towards defensive growth names. It's kind of an oxymoron, but defensive growth names like BJ's Wholesale Club. So it's defensive in that it's a consumer staple. And when inflation's hot, consumers start looking for discounts wherever they can get them. So they start buying in bulk. And BJ's is the relative value play versus Costco. It's kind of like the ugly little brother. Trades at about a 50% valuation discount to Costco, but it's growing at twice the pace of Costco. And the stock's been re-rating higher all year. I think it's going to continue to do so. It doesn't deserve to trade at Costco's multiple, but it shouldn't be at a 50% discount. So those are the kind of names we're adding right now.
So if you look at the way that those defensive growth type companies kind of factor in, does that then mean that there is an end to this so-called value cyclical trade like energy and certain industrials?
Yeah, yeah. So I think right now the market's more focused on slowing economic growth, a hawkish Fed. And I think that takes a lot of air out of those really cyclical sectors. Just look at how energy's been doing over the course of the past few weeks. Hasn't done that great.
Sure.
So I think what you're going to see more people transition to stuff that's generating constant cash flows right now. Short durations where you want to be.